Hello, folks. Brandon Chapman with you today. It's another edition of the TheoTrade video. It is January 13th, 2025, and I'm Brandon Chapman with you today. The S&P appears to be recovering off our lows. Is that a good thing, or are the crude realities for the market and inflation very apparent today? And do we see continued weakness in the broader market? We're definitely seeing regional strength based on certain sectors. Energy up 2%, materials up nearly 2%. Industrials pushing up 1%. We're going to look at a few names in that space, but this is definitely kind of reflective of not just the broader theme of crude oil and oil prices likely continuing higher, something we've been looking at for the last kind of about month or two, but also kind of picking up some of those names that might be contributors to help the cleaning up Los Angeles and rebuilding it. And so we're going to look at some of that today. But if you look at forward/CL just for a moment, we're about a half hour before the close. Oil prices are up another 3%. We saw a big pop on Friday as well. Generally, the trend has been higher, but we're continuing up more quickly. Certainly, there's going to be a lot of resources. If you go back to Hurricane Katrina and the devastation there, doesn't necessarily match in terms of the economic toll, but you definitely saw things playing out based upon the rebuild, right? Based upon the cleanup. And we're seeing very similar dynamics playing out today and even yesterday. But oil prices, we do know something. We've looked at, for example, the product depth here. If we look at forward/CL, oil prices are in what's called backwardation. What that means is prices are rising as we move out in time along the futures contract curve. What that means is that we have a relative shortage in oil, or at least is what's being priced into the market. So as a function, we're seeing this kind of continued decline here in terms of prices. Again, pushing forward, we're looking at these back month prices pushing forward to the current spot price, and that upward pressure will continue to build. And with oil prices going higher, of course, what does that do with regards to the outlook for inflation? The bond market should be experiencing some degree of weakness. I know I've been looking for the potential that the bond market could potentially start to flatten out here, may start to reverse in a positive way. Assuming what? Assuming we start to see more recessionary pressures build, but we're still in the midst of pretty sharply rising prices in areas that's going to keep our feet to the inflation fire. And so when we think about companies that, again, might be affected. Again, we've been looking at CVX for a while as an integrated play off of our lows down here, the target 165 plus the dividend. We've been looking at stocks like Apache over the last little bit over 2 weeks based on seeing option activity, option pulses pointing to upside here maybe of 28. Rising oil prices will benefit and help lift the ships in the space, lift maybe all ships in this space. We've looked at companies like shallow water drillers. Now, the service part of this picture is going to be a little bit more muddled because of some of the executive orders. So Bohr hasn't performed as well. But if you're just a straight up producer and we're seeing rising prices, well, service companies need to see an increase in production. Can we, if we're being stymied in terms of increasing production of oil, those service stocks may lag, like a Halliburton, for example. These may lag, but at some point, they could potentially break out. But focusing on the producers and the integrated name stocks like Devon, Apache, CVX, MRO, these kind of companies could exhibit some potential strength in the near term. ExxonMobil, these stocks may have significant potential upside. Exxon does have a significant presence in also Chevron too, in California too. But so we're watching for potential strength. But the names that I've been focusing on in my sessions on a daily basis, Chevron, target 165. We've looked at Devon Energy, Apache, and Bohr are the ones. And, again, we got some ancillary plays in like a CCJ. But again, this is not directly related to oil. And so the energy oil plays, natural gas try to make a breakout today. It's kind of faltering here. So again, just playing the oil-related, integrated, and producer names is the area we're seeing strength the most in energy. What about materials? Materials, we've got, again, I've been looking at steel companies over the past week. Cleveland Cliffs is one of those companies. Again, potentially seeing a breakout today. The volume's not extreme, but we may be seeing a big potential move here. And there was significant option trade a little over a week ago in CLF, in Alcoa, in Cenex. These are two aluminum companies. Cenex breaking out today. And I'm missing one here. But one of the companies that I isolated last week is one of the better value plays is BHP. BHP produces a lot of stuff, including iron ore, copper, gold, silver, etc. Now, if we look at gold, gold did back off the highs today. Again, stronger dollar may push gold prices down. But again, some of these other areas are probably better positioned. FCX, obviously with copper, it's shoring up today a little bit. But again, BHP is one that I think fits really well here. Cliffs, CLF was one we walked through a trade on in one of my sessions last week as an opportunity. Again, Cenex is interesting here as well. Century Aluminum, again, a breakout today on about average volume. As we continue kind of down this space, I mean, again, you can look at stuff like a Martin Marietta, for example. Maybe some opportunity. Again, we're talking about, if we go to the Analyze tab here, you look at fundamentals. It's a natural resource base, heavy side building materials, right? So again, if we're going to make it. So the problem is, are we in the process right now of building? Not yet, but we could start to see again, the idea they're going to have to rebuild infrastructure. So this is one to look at for potential breakout. Vulcan Materials, VMC, right? Again, watching for a breakout here. Again, I'm not seeing like the initial kind of reaction, but these are certainly two companies to watch for today, whereas we're seeing already more significant strength in iron ore, in energy, and other kind of more metals and materials. What about the companies that, again, dig up earth, your Caterpillars? CAT today up nicely, up 3%. Again, one to watch. Volume's not necessarily above average here. We might push there before the close with a half hour remaining, but watch Caterpillar. But Deere did experience a very sharp breakout today. Volume was above its 20-day moving average. We could see some big movers in the earth moving companies like Deere and Caterpillar. Tex is one that could be interesting. Terex. This is trading at a relative value compared to Caterpillar and Deere. So this has been a laggard, however. So again, I'm watching to see what happens. Even stocks like a Mosaic, for example, big move today. Some call buying in the midst as well, breaking through the prior high. This is one we saw previously. Some significant option activity back in the early December timeframe. It broke down. Now we're breaking back up again. But what's interesting here with Mosaic is this is on balance volume. What this means is if the stock's up today, like today, for example, there is about 4 million shares traded. Well, guess what? They add 4 million shares to this line. It's cumulative. The other effect is, look, the line is uptrending as the price has been stagnant. The level of the on balance volume is above anything we've seen in the last year. So again, could we see like, seed companies, other types of companies that may contribute to replanting, that sort of thing? Again, phosphate, potash crop. Again, what opportunities are there here for stuff that may help regrow? Again, I think plus we're kind of entering the growing season shortly as well. But I've really liked for a while this positive divergence as the price has generally trended down, volume has trended higher on balance volume, and the current level is above the highs of the last year. We're looking at this to get to 33 or higher. We've now produced a seed wave in Mosaic from the low to the high, the pullback. So what you do is, look at this. We say, okay, well, how much did we give back? And we look here, we closed above the 61. You just reverse this line and start to draw a projection. Your 261 is all the way out here at 30.31. So looking for that level minimum, maybe even higher, closer to 35. You back this out, the bigger potential is there, possibly. And again, but this positive divergence certainly brings us back into the potential of getting back to these prior highs of 52-week highs for the past year. I guess that's redundant, isn't it? 52 weeks in the last year. So we see these kinds of things playing out in the market today. And again, I think it's one of the areas we got to pick up on, because the fact of the matter is the weakness in the bond market is very real. And any potential relief probably has to be brought about by the idea, are foreign countries going to buy our debt, number one? And number two, what is the outlook for inflation? We're seeing this inverted yield curve kind of normalize again. There's a lot of uncertainty, and the rebuild in Los Angeles, again, is tragic. You just feel for these people watching this stuff on Twitter and stuff. It's crazy and it's sad, but the market has to move on, and we're seeing how the market's moving on here. And you look at these top performers in here too. So again, we're looking at materials, we're looking at energy stocks predominantly. We might see weakness again as yields continue to go higher. It may continue to pressure XLU. We thought we're kind of seeing something developing last week, but again, the inflationary pressures, oil breaking out, will cause some issues with utility. Maybe staples have a chance to kind of flip around here. Last week, I was looking at Hormel. This is a dividend aristocrat stock, is a potential dividend name. Again, at support, good risk and reward. Nucor NUE was one that, again, from a valuation perspective, this is in that steel space as well. So we look at fundamentals, again, steel and steel products. The one I missed that was last week, U.S. Steel X breaking out today on high volume. Again, they squashed the merger, but again, what's the needs in order to do a rebuild, among other things that may be going on economically? So what does that mean for stocks like technology too? Well, technology, with the rising yields, it's going to place pressure on them. They will likely underperform. Does the inflationary pressure maybe help financials to the extent, I guess, that we're not going to see defaults rise significantly? The steepening of the yield curve will help them in terms of loans and spreads, net interest margin, net interest income. REITs, again, this is an area that could get hurt, right? We're kind of bouncing back today. But again, rising yields generally hurts real estate. And again, how much real estate was destroyed? Are they getting compensated? A lot of uncertainty there, but industrials, materials, and energy do fit the bill. We could see the market diverge in terms of its movement, and that may slow down the selling here, but it may not necessarily be enough to stop the selling. We're down basically flat on the session, but I'm not sure we're really done here. We tried to see a bit of a move in the VIX. It faded back a bit from the highs. We just haven't seen that capitulation phase. Skew's been coming down, which is a good thing. Hedges are being drawn, but we're still at very, very high levels historically. I want to see this really get down here below 130. So I don't think we're out of the woods in terms of selling. The bond market could be very, very volatile and could create a lot of pressure for equities. So really we're looking at strength, looking for areas that may very directly benefit, unfortunately, by crisis. Maybe the one area to consider at this point in time. We just talked about a number of names to look at for the time being. Well, folks, it's been a pleasure being with you. Catch you back.